Hey, what's going on, guys? Welcome back to the channel. In today's video, I got a really great one for you. We are going to take a quick look into each one of my investment portfolios. I am finally green on every single one, and I want to talk about some of my key takeaways that I've learned from investing over the past, number of years. So without further ado, let's jump right in. All right, listen, if you guys are brand new to this channel and you're just coming here for the first time, well, I want to say welcome. My name is Dalton. This is D-Lits TV, and hey, on this channel, we talk about all things investing. And right off the bat, I want to say I'm not claiming to be a financial guru, some expert on the stock market. I'm really just your average Joe guy, right? I'm just like you out there. I just have a passion for finance, passion for investing, and I love sharing what I've learned along the way. And so right off the bat, I just want to mention, I used to keep all of my money in the bank not too long ago. I'm 24 years old right now. And I've got a lot of time to work for me with my investments. And once you realize that keeping your money in the bank is actually losing you money because inflation factors in and all of these other things add up, that you're losing money by keeping it in the bank. And the only way to combat it really is to invest your money and try and grow your wealth in other ways. So I'm not necessarily telling you guys each and every investment that you should be making, because that's more of a financial advisor. That's not something that I have the capabilities or the profession to do, but rather I just try and get people interested in investing and actually getting their money to work for them, so that way they can live financially free. That's the path that I'm on. There's a clear vision I have in mind. I'd love for my dividend income to be able to cover my monthly expenses. I could live financially free and not necessarily have to worry about that next paycheck coming in, right? And so I want to just jump right in. I'm going to go ahead and open up the applications that I have right here. I'm going to start off with one that I haven't showcased in a while, Webull Investing. This portfolio value, you can see it at the top, $10,754, up 7.75%. You may be wondering, hey, why don't you showcase this one as much? It's mainly because in this portfolio, I do a little bit of a riskier trading strategy. It's not necessarily dividend focused, although I do have some dividend investing companies within here, like Chevron, you can see, which is actually one of the best investments that I've made here, up 16%. But you'll see at the very bottom, AMC, I am still diamond handing this position. Not really diamond hands. I mean, I got in at $11.78. Right now it's $58. So I did sell some in the past, but these four holding on strong. I was paper handing, so we'll see what happens from here, but no real sell date in mind, no real price, just kind of watching and enjoying the show along the way. So this one again is up 7.68%. I'll target some riskier strategy stocks. Like in this one, I believe I have some cannabis stocks like Canopy Growth, where I'm down nearly 20% on, but it's more just risky and trying to even that out. But this portfolio, again, up 7%, $700. Now, one that I haven't showcased in a while, let's jump right into Acorns. This one I have $4,302 in. And if I scroll down, I'll show you the history for this. You can see the past 3 months alone, this is up 3.34%, $139. With this one, pretty much round up any change that I am, buying with. If you don't know how Acorns work, essentially what it does is every time you swipe your card, every time you make a purchase, it's linked with Acorns and it will round up that purchase. So let's say you're buying an iced coffee and it's like $2.75. It's going to take that remaining 25 cents, put it into Acorns and invest that into the broad market. I have my portfolio in here set to ultra aggressive. You don't actually get to pick the individual stocks you want to invest in, but it is just cool to watch, see it grow. And it's literally money that's just being put in there that honestly, I wouldn't even think twice about. It's just getting added in that manner. So $4,300 in here. I invest about $10 every single week as well, just trying to bolster up that position. Now, the next portfolio that I want to talk about here is M1 Finance. This is one that I'm really happy about. It's been so long since this has been decently positive. It was positive one time in the past, up less than 1%, then it dropped pretty quick. I invested in a lot of these tech heavy stocks. If I go into my EV and energy, you can see Tesla is the biggest holding right here, down just 0.9%. But this overall portfolio at times was down 25%. So what I learned from that is, if you believe in these companies, you really feel like you're investing in solid companies. All you got to do, invest as they dip. That's what I did. I kept putting money more and more into this portfolio. I was driving the costs down. Now that things have flipped around, this overall portfolio is up about, 6.19%, $260. And I don't see this crashing a ton anytime here in the near future. But again, the market is highly unpredictable. I can't say that this is guaranteed to stay positive or anything. But if you guys are curious about the investments in here, it'll be in a link in the description. You can go check it out if you want. One of the cool things I did with this particular portfolio was structure it out in different pies. So you can see as I clicked into EV and energy before, you could go into something like e-commerce and consumers and then scroll, and you're going to see what is invested, what makes up this portfolio. And there's a different sort of way that you can structure out how to invest pies within pies. And I've made a video on that in the past. I'll link it right here if you guys want to check it out. But overall, super excited about this growth portfolio. Happy to continue putting money into it as the prices go up. Still going to invest as the prices go down. I'm still going to invest as well. Just continue dollar cost averaging. And that's what I do with all of my investments. Now, if you go over to my Roth IRA here, this is up 7.98%. I think it's really important because, like I said at the beginning, I'm not an expert investor, right? I'm not the best, the smartest guy out there when it comes to the stock market, but I think that the proven methods in the past have been invest in a broad market ETF. So in that particular portfolio, right, I invest in Vanguard's total stock market index pretty heavily. I'm pretty heavily into that investment. And basically, as an investor, what you want to do is beat the market. And if you can beat the market, you're in a pretty good spot. But time and time again, this ETF is going to give you around an 8 to 12% return annually on average on the stock market. So if I can lock in some of that, and that's exactly what I'm trying to do with this portfolio, is make sure that I'm at least getting the what the market is going to return. That is the overall goal. So again, up 7.98%. This is over the past year, by the way, 7.98%. So this hasn't been around for an entire year yet. Obviously, it'd be a lot higher than this. But with my other portfolios, it's kind of my goal to be able to beat what this one will perform. So again, 7.98% compared to Webull, up 7.69%. So I'm not doing as great with this portfolio, but again, this one's riskier and we'll see what happens in the future. Now, the last portfolio that I want to share, that I want to discuss in this video here, is Robinhood Investing. And as you can see, this one is $22,868. So this is a majority of my portfolio. And if I go ahead and show you over the past year, this one is up 18.51%. So this one's done pretty solid. One thing that Robinhood Investing does not factor in this chart are the dividends that are being paid. And almost every single stock, aside from Tesla in this one, and I think one share of NEO, is a dividend payer in here. And so everything that I get paid in this portfolio, I just reinvest, churn it back, try and make more off dividends, because as you're reinvesting those dividends, that next dividend is going to increase, and everything's increasing. The market value has been going up. And so that's why we see this very solid return, $3,000, $3,500. And so that's what I kind of want to talk about to close this one out, is the importance of getting your money to work for you. So like I said, if you're not investing your money, you're losing. You're not going to be making money. There's so many different ways that you can go about investing. And there's a lot of practices and principles that you need to make sure that you have in check. And again, you don't need to be the smartest guy out there, right? Like, I started these portfolios and I really, again, I don't have the best knowledge when it comes to investing. I don't know everything to look at. I don't know everything out there. And, but basically just breaking it down and using common sense, that's exactly the style of investing that has worked best for me. And what I think translates the easiest, and really people can grasp that, because I think that what a lot of people gravitate towards me on this channel in particular is just the relatability of it, right? I'm this young guy who's trying to make it financially, but also just the way that I go about investing just clicks on so many different levels. All right, now briefly, I want to cover some of my biggest takeaways when it comes to investing. Don't let other people get inside your head, especially if you're sharing your investments. I've been really open about my investments, and people are going to hate on them no matter what you are posting. If you invest in a certain company, there's really two sides to it a lot of times, and people are going to either agree strongly or disagree strongly, and you're either going to be called an absolute idiot or a genius for picking the right investments, right? And there's no real way around that. You just got to look up the information on the companies, make sure you truly believe in them, and feel firm about your investments. If there is somebody that's coming at me and they're saying, something about a company that's negative, right? If I can't combat that argument with an argument of my own that I'm making, like maybe they come at me and say that the company's valued too high for X, Y, and Z. And then if I know about the business plan and I know how they're trying to mitigate some of those losses, then that's a perfect example of understanding what the company is and knowing well what they're going to do. Another key thing for me is that I invest in a lot of companies that I actually use their products. So I got a Yeti mug right here. I have invested in Yeti in that Webull portfolio. They've been doing really well this past year. Again, Apple is another one, for example, or even Disney, utilizing those services. Netflix. I eat Chipotle. I used to eat it all the time. I've been eating it a lot less now, but Chipotle is a big one that I've made a decent amount of money from too. So there's a lot of companies that you can identify just from using the products and using common sense investing. If you have a big need for something, it's likely that somebody else does as well. And there's so many other people out there like you, so it just kind of tacks on from there. Now, another thing that kind of tailors in with opinions about investing, it's also keeping your emotions as level-headed as you can, not getting too involved. Like if I'm getting crushed by a stock, but I'm like, I still believe in this stock. For example, Tesla. I had invested in Tesla when it was around $400 in one of my portfolios and then reinvested around, I believe, $600. And then for a while it was tanking, but now it has gone back up above that value. And it's been looking really, really great with that investment as well. So it's just kind of understanding, not every single choice you make is going to pan out right away. There are several times where I've talked about stocks that I've invested in that have then dipped, 5-10% and then had massive bounces going up 30% from that one dip. So it's just interesting. You just want to make sure that you're doing your due diligence, doing all the research you want, and identifying some solid players. Now, again, a lot of people try and absolutely crush how the market is performing, and they make you feel like failures for not necessarily getting the same return as the market. But really, if you're doing better than what the bank is offering, that's where you need to be. And if you're making any extra money, doesn't matter how conservative you're being. I don't like losing money, so I take a little bit less risk, right? And so you may do the same. And it might not be the best return that you could possibly get, but knowing that you're going to be able to hold on to your money. And with dividend investing for me, knowing I'm getting a paycheck, even if the stock market tanks a ton, I love that. So that's kind of where I'm at. That's where my mind is. That's me as an investor. I know that a lot of you guys are similar out there, so it's just nice to connect with you guys. So anyways, thank you so much for checking out this video, and I hope you have a great day. I am the new Andre Zick. Fire.